Yo, ladies and gentlemen, what is going on? Firstly, I would like to apologize for not being able to do anything yesterday. I had a bit of a situation, had to take my daughter to hospital. She's all good, but unfortunately now we've had to go back. So it's just swings and roundabouts with kids, ladies and gentlemen. So this is why I'm doing this video for you now, just to get you aligned and prepared for the market opens that will be happening very shortly. In the next hour and 15 minutes, we're going to dive into the idea of what could the market do today and what zones do we need to be aware of, especially when it comes to Bitcoin, all right? So let's just start off with price action. Bitcoin right now seems to be holding inside of this zone, and you can see that the 20K range is and always will be that psychological area where people get excited about Bitcoin, all right? 20K seems to be that psychological zone because that was the last high that Bitcoin had taken back in the day. Now check this out. In front of you is the glass node, okay? So let's just go to that point where Bitcoin had actually nearly hit that 20K range. It's just right at the tip right there. It actually hit that $19,587 move, okay? This is where Bitcoin is flirting with right now, okay? And if you notice, based on this net unrealized profit and loss zone, this chart implies that at this point, this is where people were feeling euphoric and greedy at this point. Okay, so then if we take this back to the actual chart itself and look at this zone, are those same guys getting as excited for Bitcoin at this point? And are they feeling the pain in the sense where they're like, oh my God, if it releases from this zone, then we would naturally assume that Bitcoin is going to take a nosedive because that's exactly what it did from that point. So then if we actually zoom out on the 20K range from back in the day, you can see that it came all the way down towards the $3,000 mark. This is why it's such a psychological area in Bitcoin, especially for Bitcoin holders in net unrealized profit and losses, okay? Now, let's just look at Bitcoin right now. It's flat across the board. Now, today in principle would be a free trading day. What do we mean by that? Well, if you look at the news announcements that are coming out today, we have the final GDP quarter-on-quarter reading for the US. We have the unemployment claims, which is a bit of a laggard reading this time of the month, because if you see here, it says here, it's generally viewed as a lagging indicator. The number of unemployed people is an important signal of the overall economic health because consumer spending is highly correlated with labor market conditions, okay? And unemployment is also a major consideration for those steering the country's monetary policy, all right? Well, if we have more people in work, then we're going to have this problem with inflation, and the Fed's going to have that issue of how are we going to control inflation if people are still outspending money? We need to increase the interest rates even more so that it encourages people to not spend so much money. We've already got the issue that the mortgages applications themselves are actually dropping because it's so expensive to get a mortgage right now. Yet we've got more new home sales. If you look at the actual reading up here, you can see that we've had 685,000 home sales, new home sales coming, okay? Now, if we look at yesterday's reading of the pending home sales, if we refresh this, all right, you can see pending home sales, where are we? Pending home sales was right here. That came in less than 2%. Okay, they projected minus 0.9%, but pending home sales minus 2%. So people aren't selling. Okay, there is a reduction. So that could be an indication of people not wanting to get new homes, get mortgages and what have you, not remortgage. That could be an indication of that. They are talking about the idea that the housing market is going to have a little bit of a problem, that it's likely to take a bit of a nosedive. And that's what's going to really steer the Fed in its direction to managing inflation. All right. Now, what also you've got to consider is the following. What's going on across the marketplace to understand how likely or where Bitcoin is likely to end up? Well, let's just look at yesterday for a second. Dollar dominance yesterday saw a nice little rise to the upside, but then, of course, it started to come down. Now, the situation with the dollar is dollar be climbing so much is because investors are focused on the Federal Reserve's aggressive approach to interest rate hikes, okay? Now, that's why the dollar is rising, because they know that it's just going to be a problem if the Fed keeps on increasing the interest rates, all right, to control this story of inflation. But what we're seeing now in the dollar is we're seeing profit taking, okay? It can only go up for so long. And all the dollar net longs are realizing a return on investment now, which is why you're seeing price come down for the dollar. Now, the question is how low is the dollar going to be dropping for? Is risk off? You know, is the risk off right now? Are we just starting to pick up assets? If we go across NASDAQ and S&P, you can see that NASDAQ has made a low, but bounced away from it, taken out some recovery of the vector candle ranges, but they are still back in the same range that they had been selling into, okay? We've got these vector candle zones right here, and this is on the 1 hour time frame. The futures markets may be tipped to be opening not so aggressively to the downside, but we do have this little drop in price, which if we look at the current price point of the NASDAQ at 11,416, it closed last night at 11,493, okay? So we might just see a little bit of a gap down in the chart, and we would look to see that gap getting filled at some point. But the narrative is every move that you see the market make up, it's going to be welcomed with a move down, because it's just, when does the idea of the logic of fear getting installed into traders? So in other words, any fast moves up is just quick profit taking, and then the narrative continues with price going to the downside. Because you've got to remember, there are people caught in positions, and there are people and institutional fund managers and hedge funds, they are trying to off-scale and release the risk and get rid of it. So any move up is taking away a negative off their balance, or if they are running for shorts, then they are covering those shorts, okay? So just be mindful of that. Now, if we just go over to the higher time frames, we can understand that as long as the NASDAQ keeps going down lower, then that will give us the understanding that the yields themselves keep on rising. Now, the yields made a high of 4% yesterday, which is a little bit of a sticky situation for us, and they seem to be holding inside the 3.79 zone. What you're looking for, guys, is in principle, when is the narrative of fear just going to get engaged in the chart again? So if it goes up, be prepared for a move back down, because this is where it can change and go back into the narrative of everything coming down and traders seeking safety, okay? Going into a little bit of Forex, ladies and gentlemen, we saw a little bit of news for the euro itself. Although the euro confidence in the eurozone itself was at a 20-year low, not 20-year low, it dropped to the lowest since 2020, because Germany moved to the limit of the impact of soaring energy costs by putting a lid on gas prices, all right? So we've got a problem in euro with regards to energy. That's going to have an impact on the euro, because everything is just going to inflate and go up. That's a problem. Okay, you had the pound yesterday with the Bank of England making an aggressive tone to buying back the yields, the gilts themselves. The market welcomed that, but at the same time, the market seems to just go back into its normal array of price action, and it's not really making the move up that we want to see it do. Look, they recovered that wick that we spoke about yesterday, and now it seems to be stalling and trading sideways inside this zone. Now, listen. We do have news coming out today, but the bigger news is tomorrow, which is the core price index, all right? So the market does have a free day to trade today, all right? Given that we don't really have that much volatility in terms of news coming out, but they could be preparing for tomorrow. Now, if the core price index tomorrow comes in above expectations, then the market is going to react aggressively to this, because then it just means that the Fed is going to go crazy and just really hit the interest rates, which is going to have an impact on the dominance of the dollar, which will see the dollar coming back up. And then we are going to understand that Bitcoin may likely come back down even further. So looking at Bitcoin's price action now, ladies and gentlemen, we do have a green vector candle down at the lows right here, and we are trading above the psychological ranges. We have recovered the vector candle inside of this area in the Sydney session to only recover it. If we actually put down the principle of the vector candle zones, we understand that at some point they're going to look to try and recover either side. So like I said to you, remember, the faster they move up when the markets are trending lower, the more inclined to believe that it's going to come back down again. Remember, they don't care about the price of Bitcoin. What they care about is if they can come to the liquidation points of the chart. Now, if we look at the liquidations of Bitcoin, we can go over to Binance, and we are going to understand if Bitcoin is going to make a journey to the upside or to the downside based on the commitment of traders. Look at this. You've got Bitcoin trading right now, and on this chart, we got $1.137 billion worth of long liquidations at the 19225 zone. Okay, so principally you would expect Bitcoin to come down towards this point because it's dead money sat there in the charts waiting to be eaten. Below that, you have 894 million, and below that, you have 678 as well. All right, so there's a lot of liquidity for them to come back down into. Again, any move up doesn't mean that Bitcoin is going to continue up for the longer term. All right, just be careful. Look at the range. It's spiky, it's choppy. We might even get the same sort of behavior in New York today, guys. So just be very cautious with your trading today. We're going into the the core price index data tomorrow, so they could be setting everything up for that. And the markets will be sat flat tomorrow. And tomorrow is Friday, which we know it's a base building day or a profit taking day. So just be very cautious with your trading decisions, ladies and gentlemen. All right? Quickly rolling over to Ethereum itself, you can see Ethereum is also behaving exactly the same way as Bitcoin. Now, when we do get into the New York session today, ladies and gentlemen, always remember that the US Brinks session itself starts with the Brinks box, and then you have the New York session area itself, where they either at the highs form, because we can see that price has moved up. So we would expect the Brinks box to form like this. We would expect a stop hunt to happen inside of this zone. And then come around 3 o'clock when the Brinks box finalizes, we expect the high for the session to be formed. Where that high ends up is a different story, because we've already seen that they're spiking up, but no follow through. So it seems like this area is an area where they're grabbing retail traders' interest to go long. So we might see a little bit of a pump in the New York session, which could then end up leading price to come down, okay? Remember, it's all about when does the narrative of fear get engaged in the charts, all right? We know dollar dominance is taking a nosedive. That means they are transacting on dollar. So that means they're picking up assets. You can correlate that to Aussie yen. This is something that I speak about with the patrons of the channel, where we talk about the carry trade principle. What I mean by that is you get investors, institutional traders will transact on low-yielding assets like dollar and yen, and then use that dollar and yen to go pick up high-interest return assets like Aussie, and use Aussie to pick up stocks, to pick up other currency pairs against the value of the dollar. But if everything is overall dropping, any move up will be a short-term profit taking from participants in the marketplace. So just be aware of that. When you are in a profitable position, when everything is going up, make sure you pay yourselves. Ladies and gentlemen, again, I apologize. I won't be able to bring the fire, but hopefully this video is going to serve its purpose. And I will check in with you guys later on tonight. Mad love and respect, ladies and gentlemen. I apologize sincerely again. I hate killing the momentum, but there's things that I've got to get sorted out. Got to help the mini market maker. Mad love and respect, ladies and gentlemen. Got nothing but love. Take care of yourselves, gang. Peace.